不好，我在70年我在。
Hello, can you guys hear me?
Yes, I can hear you.
Oh, actually, sorry guys, I have some issue in my mic or maybe some issue in the studio. So that's why it was very hard for me to connect my mic. And now, after leaving and rejoining, now it's working fine. So, hey guys, sorry for the delay in starting the episode. So, again, I would like to welcome everyone to the new episode of BNB Builder Talk. And today's episode, we're gonna discuss about RWAs on BNB Chain, especially with some experience builder on BNB Chain who are gonna teach you how to build your RWAs on BNB Chain and their experience, and basically gonna answer you in the right way if you are someone who is interested to start your project, your RWA project on BNB Chain. So let's start without any delay. I would like to introduce my guest. And we have founder from NCs, we have a pack lead from Fairshare, and co-founder from PubBucks. So do you guys gonna have your introduction one by one? So yeah, let's start with founder of Renaissance, Winsman. Go
Oh,
ahead.
hi. Yeah,
Hi.
hi, everyone. Nice to meet you guys. I'm founder of the Renas protocol. We are a protocol want to do the fixing the trust and custody problem to make the TCG can liquidity in through the blockchain. And because I'm just back from Europe, so a little bit tired, but happy to have time to chat with anyone who are interested on TCG, collectibles, or RWA in BNB Chain because we just break the new milestone, break the 8 million revenue, and at today, and I think it's a one super strong evidence to showcase BNB chain is the most strongest organic user chain for every single protocol. So if you are a builders, I will strongly recommend that you build your project on BNB chain. And happy to chat with you guys for any problem on collectibles, TCG, RWA, and BNB chain product. Thanks.
Awesome, awesome, and congratulations to your team. So yeah, Selena, you're gonna go next.
Sure. Hi everyone. I'm Selena from Fishes, and now I'm leading Fishes BD and Growth. So Fishes, in one sentence, we are the financial layer empowering on-chain stocks and the digital assets treasuries. So we are now focusing on one thing, which is bringing tokenized stocks to crypto users through DeFi on BNB chain. So currently, we've onboarded over 130K batch holders on BNB Chain so far, and I feel like we're just getting started. And again, thank you for inviting me to this online workshop.
Awesome, awesome. Thanks for the introduction. Alex, you're gonna go next.
Oh, hi everyone. Name's Alex, co-founder of the Popbox, and I'm so happy to be here to share our some experience information to you guys, and then our project from Japan, and we have a few offline store to selling the TCG card, Pokemon card, and then the few store in Tokyo to selling the watches like Rolex, Patek, kind of the real asset in Tokyo. So our Popbox project is based on Web2 traditional business model. So, yeah, thank you to have this opportunity. Thank you very much.
Awesome, awesome. Okay. Let's start the round one without a delay. So, for the first question is basically to all of our guests, and it will start from Winspan, then Selena, then Popbox, then Alex gonna be gonna to answer the same question. So the question is, when we say RWAs, it means very different things, right? So how do you define RWAs in your context, and what made you to choose building a RWA product instead of building pure DeFi or a AI product?
Yeah, I think everyone in this space, I guess, is understand the meaning for RWAs is a standard for real assets, right? But for us to like participate in the market, I think the key for the real assets, if we want to um, prove that is a true RWA, true real assets, I think the key is about the custody because a lot of RWA project they really hard to explain those assets is how can use blockchain to prove that is a real things actually. That's mean okay today's we saw a lot of protocol launching RWA, right? But those RWA behind the back, how can you verify that it's real world assets? So
Mm.
this is why for us is we start for physical collectibles first, and focusing on trading card because it's like the most liquidity collectibles in the world. We are working for building the first full company useful operating system to them to make those Vote company can easier to put and pay to prove those assets on chain. Those Vote company no need to like, for example, paying a lot of fees to who SaaS service, but still can improve those assets on chain, become a third party custody. And this is what we are working for to make all the on-chain collectibles is truly one by one digital twins. This is what we think and the key of the real assets for my perspective. Thank you.
Awesome. And why you selected RWAs, not DeFi or AI?
I think for me, RWA is like assets like crypto, or even like NFT. So what we are thinking the potential of RWA is that it can be DeFi and AI. For example, we have sharing about a lot of different content to the community. Is that we have our own AI agents skills. We launch at a beta version at April. We also turn the whole platform to CLI model. That's mean all your who in Web3 you have your agents. You can native help your agents what they want to do in our platform. For example, you want to buy a Pokemon card, right? In the past, you let your agents to search. Actually, she's using some sandbox model to browser or to using browser to check. It's really slow and burn a lot of token. But we do is we build a command language interface to let AI agents can native using the user natural language to tell them what they want to do and in Ranos protocol. This is like a really good showcase that why we start from RWA, but we still can bridge to AI. The second part is the DeFi model. We also already running a Web2 DeFi model in our protocol. Is a lot of card in our platform is we using a leverage model to lend from the user. That's mean consignment to earn. This is like a Web3 model. We let users stick their card into our platform. We put their card into the gacha machine to let people to play. But why we can do that? Because actually the physical ownership is keeping by in our Vault company, not my Vault company. It's our different Vault company using our protocol. They become a third party custody company. They can keep those assets and make people can trust. That's mean okay. Today's some user they have a lot of card, right? But now they only can put it in the cage or put it in their room or blender in their house. But now because our protocol can let Vault company prove those cards on chain, you can send your card into the Vault company and then stick inside. We use those assets to launching to the user, just like consignment, and then generate yield. We're providing to our alpha test user is around 5% per month. This is like a whole new model, and no one can copy because those other platform all is focusing on consumer. They don't do much technology innovation on DeFi and AI, and we did. So this is why we can let user to trust the protocol. Okay, what we trading RWA in your platform is actually real, and this is why AI and DeFi will all put it into the Ranos protocol with RWA. Yeah.
Awesome. Yeah, interesting to know this. So Selena, you know,
Yeah, so actually, I think RWA now is a pretty bottom at this point, right? So you've already got like real estate bonds and commodities, those all sorts of stuff. So for us at Fuchsias, we are very specifically focused on chain stocks, tokenized equities. So what we are building is the distribution and composability layer. So you can think of it in this way. So there are already players like Ondo tokenizing US stocks and putting them on chain. So our job is to bring those assets to users and help them to discover what's available and get early access, and then actually use these stocks in DeFi, for example, like lending, staking, all sort of things.
Interesting again. And then Alex, you are mute.
Well, it's my turn.
Yeah, it's your turn.
Oh, okay. I'm sorry about it. Yeah, and so the question one, right? We have a we with our business from a Web2 offline store in Tokyo. We're selling TCG cards and then the watches and jewels in Tokyo. So the our real asset like Pokemon card, and then the watches like Rolex, something like famous brand, and the this popular asset is in the secondary market. The price is going higher and higher. And then now we're using the Web3 project to make these real asset to minting the NFT. So you can buy these the NFT without to come to the store. Even in the different country, you can buy and trade in time. So we're using this experience to make a Web3 business. So that's what we do. Yeah.
Interesting. So, okay, let's go to the round two. So many people have doubts like if everything is physically there. So, what actually happens when an asset is tokenized? What are the steps from real world assets to become on-chain representation? And how do you guys handle the ownership, legal enforceability, and asset backing to RWAs?
Okay, let me do it, right? I think when we looking back to the collectibles history, the first generation for who trading those collectibles is only offline. For example, 1,000 years ago, the people can swap their stone and some different jewelry or meat or something. But later, the second generation of the collectibles trading is like 10, 20 years ago when internet coming out. The user no need to face to face. They can ship any other item to other country to do the trading. But they don't. They still a lot of user is rely on the face to face trading in collectibles. But this method is the wide collectibles market. Even every single year is already like a rocket high to grow. But still, we saw that a lot of limitation. For example, physical problem to restricted those volume on into very liquid. For example, if I want to trading any single, for example, one piece card now, I need to like buy on eBay, even already like internet, right? We need to wait for 7 days and then I get a card, but still have a lot of problem there. For example, the fake one, right? Or the damage of that. But now become, for example, we come to a new generation with AI and blockchain technology. Why we don't just use maximize the tokenization of the whole potential onto physical assets? This is what we think what is tokenized, right? After tokenized, if those assets is under a right custody, if have a lot of great infrastructure, and then the user can enjoy the unlimited liquidity for only trading the ownership. That means actually the physical location or the physical ownership, not much people caring about that. Now the people still a lot of collector in collectibles, but the biggest like group of the people is traders. A lot of traders in the world they trading crypto. Now they trading Pokemon card, but still is offline or on eBay. What the tokenized, that means we allow new user is unlimited or mass adoption level to a new world to train to exchange the collectibles. So we never said we are a Web3 company. We are technology. We are collectibles technology company. We're using blockchain tech to empowering those assets. That's mean what is the tokenization, and also the gap or the space, the gray space of the regulation or the legal enforceability, right? I think it's like a natural advantage of collectibles. For example, every single country long time ago start to regulate crypto. That means the government want to charge people about the tax, about a lot of different things to track those users. But from 2,000 years ago until today, when you trading something physical and offline actually is uncheckable. Definitely, we are not encourage user think about the way to legal way, but I want to sharing about the key opinions is that the physical collectibles on chain is good for every traders and every user, and also native crypto user because they're same type of the user. The TA is similar, the motivation is similar. So if when we handling about all the things on those assets, we the first step is custody because we don't want to keep those users' assets. This is a super big red flag into the whole market. If we keep a lot of card and then we got bankrupt, we got corruption, we did a lot of things. Actually, the regulation system is nothing can do on us. But now we build a first custody layer for all the physical collectibles for real world folk company to do that first. And then I think on the legal way, we already step a big step to protect user. And also after that, we're definitely looking for different local market. And when we, as a collectibles platform, we definitely have a model called gacha, but we still providing the most fairness mechanism to user. For example, fully on chain, every single user they can track all the data on Merkle Group. They can track those cards. Is actually we already packed before the people pay the money. That we can secure the real fair to user also. And also at the end, different local have different regulation on some percentage gain. We also will work on that to fulfill all the requirement to let people know that Renes Protocol is a fully regulated company, and we also have protocol listed or some stock exchange like Nasdaq in the future. This is what we want to share. Thanks.
Awesome. Selena, you noticed?
Sure. So at a high level, I think the flow is like someone sources the underlying asset and decides which stocks to tokenize, and for example, sets up the liquor wrapper, and then you may need regulated custody, like actual shares sitting in a regulated entity with audit trails, and then the on-chain issuance part, the smart contract that represents the ownership. And actually, the smart contract is, I think, the very easy part, and the hard part is to like the everything before you set up the smart contract. For example, the legal structure, the custody, like Winchan just mentioned, and the compliance. That's why you see like there are many specialized players like Ondo and Securitize focused on exactly that. And actually, we don't do any of that ourselves. We are positioned downstream. So our point is once these tokenized stocks already exist on chain, so how do users find them? How do they get access, and how do they actually use them into like on-chain DeFi strategies? So the analogy we use is if someone else builds for example, the stock exchange, we build a storefront that brings users in and helps them to do things with that what they find there. So for users, the way it should work is there's a regulated custodian, for example, holding the real shares, and there's auditable proof of reserves, and the on-chain token represents a claim of that on that. So our job is making the user experience and access work well on top of that trust. So also, I think for the regulation and legal, it still depends on a lot of jurisdiction accordingly to different regions or countries. But I believe the industry is moving forward clear frameworks. So also that's why I think being on BNB Chain matters, since the ecosystem is actively working and resolving these compliance integrations.
Interesting. Alex, it's your turn.
Yeah. Let me ask you some questions first. Are we on the question 4, or are we going through all the question to the down to like question 7?
Sorry, do you want me to repeat the question again?
Yeah, in the question 4, right? They actually happen when the asset in
Yeah,
tokenize.
actually, yeah, we have. Let me repeat the question again. So the question is, what actually happens when an asset is tokenized? Because why it's required to tokenize if it is already in a physical form? What are the
Mhm.
steps from real world asset to on-chain representation, and how do you handle the ownership, legal enforceability, and asset backing?
Okay. Okay. Thanks. Thank you. Uh, so we I just mentioned we have an offline store in Tokyo in last question. So we have a lots of real asset, the car, the jewel and watches. We're using these asset to maintain the one of them NFT with the PSA numbers. So the car in the market, there is a lot of fake one and the real one. The how to verify is there is the company called PSA. The service is they bring in one of the numbers to verify it's the car is real. So our NFT is also the one of one, and then the NFT has the PSA number on it. So you can verify these assets is real, and the user can buy the blind box, and then they randomly get the digital asset. And if you want to keep it, just keep it. If you want to send it to your home, you can apply to our platform, so I can keep send the asset to your home. And if you can trade anytime in the secondary market. And then uh, we have a Japanese local the legal team. The we explain our business in the different countries. So the the ho- the so the every the NFT trading is its own chain, and then the off chain servicing on the offline store. Yeah, yeah, and that's it. Yeah, thanks.
Awesome, awesome. So actually, without a delay, what I'm trying to do is I'm trying to mix two questions into one just to save the time of our guests. So yeah, now let's go to the next one. So I would like to know what part of your system is on chain and what part of it is off chain, and why. Because why you choose to have some of your part in off chain, and how do users trust on that on chain token truly represents a real asset?
Okay. I want to make it shorter. Sorry.
Yeah.
um,
Okay.
and have for example, for the Renas protocol on collectible side, our on-chain side is ownership on-chain, minting on-chain, transfer the ownership on-chain, the marketplace activity, gacha execution, settlement. Those things is on-chain because we want to make it transparent, and also want to make it easy to verify it. But part of that mechanism is need to be off chain. For example, the physical authentication, we need to work with the local cash shop different where. So if Popbox Alice have ideas, we can work together later. We also can figure out that we work for different countries local cash shop. They will become our first authentication node to help us to check those card is real or not, and then they will sign the contract on chain. But the check those action is off chain because need a lot of professionalism to check those card is real or not. And also the storage definitely off chain because we've related with the physical item, and also the logistic with the redemption and deposit. This is off chain. We encourage user redemption those card because we see a lot of potential on arbitrage those card in different countries. For example, Korea, a lot of user for Korea, and shout out to Korea community today, is they facing a lot of the pricing arbitrage is they need to pay a lot of margin to get Japanese model card in PSA grade 10 in Korea. But when we have like Renas protocol, we can easier to let user get all the ownership about those Japanese card, but they no need to ship those card into the Korea and pay the tax. They just need to keep that on chain. But the redemption, the deposit, those part is off chain. So if they want to get the card, they can offline go to get it, or they can redeem the card and then we ship it to them. and this part is like off chain side, because those all the things is like a real world behavior. That's mean for the business model, we don't force our protocol or our company model or the process need to be all on chain. We're reasonable to make it like a real business as a company. As something we put it on chain, but something we don't think need to be on chain. Yeah, thanks.
Awesome. Interesting to know. Selena?
Sure. I think the way I think about it is pretty simple. For example, if a user should be able to verify it independently and it goes on chain. However, if it needs to like some real world legal enforcement, it can live off chain with proper compliance. So, for example, for us, Fuchsias, we've got over 100K user count, head count, and token ownership, and all the DeFi interactions like staking and liquidity provision. So user they can check all of that themselves on the Explorer anytime. And for the off-chain part is where the custody lives. For example, the KYC and legal compliance when required. And I think the smart contract itself cannot enforce a legal claim on a share of Apple stock, right? You need regulated infrastructure for part of that. So, and for the like trust issue, I think it actually comes from few layers. For example, first you need to have an underlying issuer or custodian to be regulated under the real world law. So, for example, players like Ondo, they're regulated entities. So, if someone or something goes wrong, there's legal recourse, and that's the first layer. And the second layer, it's like proof of reserves. For example, Chainlink, they have been building. You can see users they're able to verify that the token in circulation and what are actually backed. Yeah, and however, I think to be honest, many crypto users they still don't read audit reports. So the true signal for most crypto user or for most people is which platform support this token. It is on big listing like exchanges, and if the key is if the ecosystem it treat it like it's legitimate, then users will follow. Yeah, so actually I think that's it's also a big part for what we are now doing. So we are curation and distribution layer. We can help them to understand what they are accessing, who issued it, and how it's backed. So in long term, the industry itself needs standardized like proof of reserves frameworks for tokenized securities. But I believe it's coming.
Exactly. Right. So yeah, Alex.
Yep. I think Winchman just answered perfectly what I want to say. So just and the different thing is we have an offline business. So the off-chain part is I'm selling to the customer. I buying the car from the customer in the offline or the business model in off-chain. And in Popbox, there's using NFT as to trading all the trading for the NFTs on chain basically. So I just mentioned the trust issues. We using card to verify it is fake or not, or something. You using the PSA number, right? And then we also doing the watches and jewelry too, and then especially the watches have the guarantee card from the boutique, and then the watch itself has a serial number on it. So same way we using this number to minting NFT. So it's one asset. That's like that.
True. So, okay. So let's go to the next. Tokenization is alone not enough. where does the yield actually come from, and how do you guys design sustainable yield just or just short-term incentives?
I think this question is like perfect for us because we are the only one protocol in the world, even in crypto, or we said Web3 is we can confidence to tell people where is our yield come from. Because, for example, only tokenized card is not possible to create yield, right? That's mean what is the company how to using those tokenized assets to get profit and give back to who also is part of the ownership of the company share or staking holders or something. So in our sector, we will through the gacha mechanism to create the cash flow. It's easy to understanding because we put the whole process on chain already, and we also let the user already know that what is the margin in our platform, because those card is not we buy from the market. For example, if a if a project today they want to get more user in TCG area, they need to get more card. But those card is limited supply. If you are not like Popbox, those strongest background to have an offline card shop, how can you get a lot of card to fulfill a lot of user, but no need to increasing your cost? So at the end, we think about that. Okay, the model is we need to have a model can use those assets as a reward assets to generating cash flow to the company, but no need to like spend a lot of money, fulfill a lot of risk about the pricing up and down, and also can have a benefit give back to the user. So what can we do is we have a vote facility in every single country. For example, Hong Kong, Malaysia, Singapore, and those card, if who want to generating yield monthly for 3 to 5%, they need to ship those card into the vote company, and those vote company will become the third party to check those card and custody themselves grade into the vote. And then those NFT were minted by those vote company account on chain. And then you saw that okay, all the assets is by third party already keeping really well in the vote, and then the user start to trading it, right? We will put those selected card into the gacha machine to let people to play. And then when the people, if who get the card out, that's mean out the card, we just like treat that as a consignment, successful selling that card. We give back the money. But most of the user in crypto, actually, they will choose buyback model. They will take the token left, and then they will give back the card. Those cards will go back to the treasury, and then we're generating a lot of different models, different yield, different cash flow to who willing to put those cards into the treasury. So this is like a simple model. Is what we are doing is maximize the tokenization model to liquidity to generate profit to user. Thanks.
Interesting. Lots of infrastructure actually. So Selena.
So for ours futures, it's a pretty tricky question. So it's actually interesting because stocks, they are already like yet bearing. So you've got dividends from the underlying equity that's real yield backed by real corporate earnings, not just by any tokens. And then so futures, what futures does is to add the DeFi compatibility on top of that, so you can lend your tokenized stocks and earn interest and pair them to, for example, stable coins in a liquidity pool, and you can use them as collateral to borrow against. So all of that generates additional yield from actual economic activity. So however, we think about this in phases, and we are pretty deliberate about not calling things yield, but when they are not. So right now we are still in the building phase, and we use participation mechanism, for example, like waitlist badges and points to reward early users. But at the moment, that's not yet. It's more like equity in the network's future value. So users, they are early and then they contribute, they will get recognized for that. So for our product, we have a fair starter. This product is open for the crypto users. When it's actually go live, then the yield needs to come from real activity. For example, like trading fees or lending interest. So stuff like that exists because the real things, they are happening, not because we are just printing tokens. And yeah, and honestly, I think a lot of projects can get this wrong. They launch with some crazy API numbers that's entirely funded by token emissions, and they call it sustainable, but it's not. And you can see users, they are figuring out that, and would rather launch with a honest like 5% by the real activity that can then promise like very crazy number, which can evaporate in, I don't know, maybe in 3 months. So yeah, I think we don't need to invent yet, and the yield already exists in the underlying assets. So our job is just making it accessible to the normal users on chain. Yeah.
Interesting. Alex?
Okay. All the asset we selling our product, the Pokemon card, the Rolex watches, the asset itself is the price is going the upside down. So we selling the product also. This the we buying back the product to recycle it and so every trade we have that we have the basic income is coming up, and then our offline store is our income like the 1 year a couple million. So our pop box business is based on traditional Web2 business. So that's where it came from. Yeah.
Smart. So okay. Now the next question is more interesting for me, because I really want to know more what kind of financial primitives are being built on the top of RWAs, like maybe lending, staking, or derivative, or actually what maybe you can answer in more right way. And how do you ensure the liquidity for RWAs, which are naturally liquid assets?
Okay. I think in our case, we focus more on full backed distribution, because this is like a key advantage is all the assets actually need to under the custody and compliance. This is what we saw that all the TCG platform didn't do that. And I think the also related with the marketplace settlement or liquidity provider full, and also consignment based participation. Those is like advantage financial products. I think that is only work if the base layer is strong enough. And also the other question is, how do you ensure liquidity, right? I think if only tokenization the assets or tokenizing the assets actually is not the solution, said okay, we tokenize and can fix that. And even until today, a lot of users were asking me, oh, Benjamin, how can you solve that, right? The first approach is that we're reducing the friction and also creating a content circulation to let people can understand, okay, this is like a really reasonable way to innovating those collectibles market. And the second part is that we want to providing like a super strong verified supply or instant on-chain trading and liquidity layer to let every assets can keep moving. We also providing a liquidity incentive model to we call super liquid to let people can similar the real world, how can the people can attractive to trading in offline, but still need to some time to build a biggest user numbers to make the whole mechanism can work. And I think the whole world will understand that even the Panini, the biggest collectibles brand, also worked with the OpenSea a few days ago. I think until the end, few days later, a few years later, or a few months later, the user all will understanding if you can trade those ownership instantly, right? Why they need to like only can trade in offline. So at the end, the whole liquidity will moving from off-chain to the on-chain world. This is what we want to answer. Yes.
Right. Selena?
Yeah, I think this question is pretty suitable for us. So, for example, I think lending is the very obvious one. So imagine one user is holding like tokenized, for example, Apple shares. So instead of just selling them or buy sell them on chain, so you can use them as a collateral and borrow, for example, stable coins, and that's already happening in some protocols, and I think it's going to scale. And also, beside of that, for example, liquidity pool I just mentioned is another big one. For example, you can pairing the stocks with stable coins, and which means it's a 24/7 trading. So for normal users or stock exchange user, they have to stop trading when, for example, the NYSE closes. But for on-chain, I think it's a pretty huge unlock for them. And besides that, maybe other derivatives like on-chain options, structured products, there still leaves a lot of spaces for people's imagination. Yeah, I think it's more we have more space to explore on that. Yeah, and then for the liquidity side, so that's actually I think that's actually where stocks are way better than other most of the RWAs. So, for example, the tokenized Apple shares has a very clear reference price and massive depths in traditional markets. So the problem on chain isn't structural; it's a cold start problem. Like the trading volume and still the liquidity is far below the traditional market ones. So, so for us, I think the answer is like the community first distribution. We've now got many batch holders on BNB Chain, so they are real users with unique wallets, and they've complete tasks and showed up consistently. So I think they are the potential day one liquidity providers for us. So when you combine that with incentivized bootstrapping through our fair share starter product, so market maker partners and other DEX integration on BNB chain. So I think they've already got a very real practical path to liquidity. Yeah.
Makes sense. Alex?
The first question, our Popbox project is not don't have any financial primitive right now. So that's the answer. And then the second question about the liquidity, the our asset, the IP itself, the Pokemon is very famous, and there is lots of fan in all of the world. So liquidity is there, and then also we get so many users from the offline store. Yeah.
Quick and informative. Great. So now the last round. This round basically gonna give our builders more clarity and maybe some learning from our guests. So basically, the question is, what is the hardest part of building RWS today? Regulation, trust, liquidity, or distribution? Maybe something which I maybe don't know. You can add here. And what are the biggest risks for users interacting with RWS?
Okay, I think until today's crypto world is super chaos. Even until like yesterday or now, you still can see a lot of user in crypto world get scammed, get hacked. I think when we're looking for building RWA into crypto as a entrepreneur, and we're definitely thinking is like reasonable move, right? But for the user is what is the benefit? Why they need to come to the new industry or new world to learn something new, right? Every single human is follow the group, follow the big party. The people who in crypto actually is already as a super pioneer in the world. But when we're talking about RWA, the people will think about security token, the people will think about like STO or something, or still like thinking, oh, RWA is like tokenizing the building is like a bullshit or something. I think the industry for RWA, just like crypto, we need a lot of time to building trust and building the infrastructure for the user. So until today, or even 1-2 years later, probably in the RWA world is still like an early stage. But who are in this field now, for example, in this AMA, or they're looking for a lot of different potential projects in RWA, I guess they will like a first generation for the crypto people. Same, because um, those now is a great generation to let people know that have an AI can easily track all the founders, all the team, all the projects behind the back, or even the cash flow, the data is real or not. All this stuff is a lot of tool can let user fixing the problem of about trust to learn out of AI now. So I think still the most hardest part is like a trust, really hard to build. But when we thinking about that, okay, if the user, if something hard, but no one to do that, how can we have innovation of the whole world? So we start from RWA, and probably we also will providing a lot of innovation tech. It's not only for TCG, it's about the whole RWA industry. Um, I mean, some example is that we trust only we can build a successful Oracle. Also, it's related with directly linkage of the RWA physical assets in RWA. It's not all RWA because we are not a like a professional on stock, financial or different things. We are professional in collectibles. So if looking for our perspective, our work of the RWA is that mean something we can work on. After the trust issue, we can if we can fix that. For example, the vote layer become a most standard like a stock. You need to have a compliance. You need to have a good custody or something like a similar. And then I think the RWA is more easy to build, and even anyone. For example, today's have some user in the chat room. They also want to build a Pokemon project, Pokemon card project. Now they really hard to do that. Even they have a lot of card, right? But what if we are just like a Shopify? We provide all the infrastructure. We let you know where is the closer vault of the user. You can just put your card inside one button to launch your gacha machine, and then you can focus your user acquisition. Or you are the wallet, you are the forum to let people can have a social network or something. Whatever, you just need to using one button, and then you can launch your own treasury to let people to pay gacha or do a marketplace trading, or let your user, let your customer all the assets on chain. I think this is the way we're thinking of really hard, because real world assets custody is super complicated. And I think Selena maybe can share more. But for us, we are working on this way to fix this hardest part for physical collectibles. Yeah.
Pretty honest. Okay, Selena.
Sure. I think actually my points are pretty similar to what Winshan just mentioned. Yeah, for us, it's more about like the trust and distribution. For the regulation, it's already like being figured out by by players way bigger than us. So our main problem is how do you get a crypto user to care about a tokenized stock when there's a new meme coin or other crypto existing every hours. I think it's a very tough question for us. And So for us, we just have to show up every day and build trust with users through our community. Yeah, so I think that's how we got many holders, and it didn't happen overnight. It happened in very long run. So and part of building trust is being honest about the risks. So depegging, if the custodian feels you've got a problem, and that's why we work with regulated issuers, and we don't try to do it ourselves. So so regulatory risk, the rules are, I think the rules are still evolving, and also the liquidity risk I just earlier on mentioned, and also the smart contract risk, same as all of DeFi's. Recently, there are many hack um, things happening in DeFi spaces. So yeah, so I think we'd rather our users to understand what they are getting into upfront, and in very long run, I think the tokenized layer gets more commoditized anyway. So what matters is who owns the user relationship, and that's where we are building forward. Yeah.
Makes sense. Lex.
Okay, the first question, the hardest part is to us is like the legal problem. So our Web3 business is worldwide business, right? And then the each country local legal rules is different. So when you provide service in different countries, you have to make sure the rule and the rule is the service is the perfectly legal way. So that's we have to make sure each country's the legal check is the hardest part. And the second question is the biggest risk for the users. I think is the make sure the asset is famous, is the asset that the everybody don't know the asset. You if you buy the digital assets, it's not no name, it's not famous. And then when you want to sell and want to trade, there is no secondary market, there is no liquidity, and then the asset's going to down. So make sure that the running company is not a paper company. There is actually a store in there, and then they make sure the asset you have is have enough liquidity in the secondary market. Yeah, thanks.
Awesome. Thanks, guys, for being honest with your answer. So now let's go to the closing question. So this is basically a suggestion for a builder. So if a builder wants to start a RWA project building on BNB chain, then what should they focus first?
I think building a project in crypto, as I'm like an entrepreneur from 2022 in crypto today until today, we saw like 99.99% all gone. I think the key is that if they want to follow the trend and build something with the trend, it's really hard because for example, we actually building a project for the trend, and I think most of the successful projects are similar. They already have a fully probably have a vision, have a plan, have a resources, have a investment background, network. All this stuff actually is really is like a earlier a lot about the project you see in the market. So even like a crypto project, it's really hard to build it better if you didn't have like unique advantage. And if we talk about RWAs, it's like a more serious on that. If you didn't have, for example, if you want to running a card business but you don't know card, how can you do it better, right? So now when we looking for all the probably the people, the spotlight come to RWA, is also showcase about the industry is more caring about the real business model or the real value about the business. That means today's whatever you're trading online as a real assets, you really want to that assets have value already. and also the business is the same. So if any people just like past few week or few months, you want to build some project like at a trend, you need to think about that. Is that good or not? Is that why you will win the game? Because not much idiots in the market now, right? Every people got scammed a lot of different time. Even no matter you pay DeFi, NFT, blah blah blah. Even you just like an airdrop farmer, you see what project does before few years in this industry. So I guess if who want to become builders, want to start with some RWA in the market as a project founder is really hard. But we can provide other angles is that you probably can using AI building some like light tour or some website, some skills, some different things using AI to easier to do that and benefit some big project, or you found some edge into the project and into the aspect in the crypto. For example, we saw a friends called the project called trade.gg. It just it's like a aggregator for all the gacha platform, or it's like an aggregator for all the marketplace. This is like what a great example is. Now it's just one man band, but building a product is useful for the user who really caring about RWA. And also we have a lot of builders in our community building tours, building trading tours, building bot, building notification, different tours for the user who can use it. And now they're free. But if those products really great in the future, or our product get like 100K, 1000K, or even a lot of different users, million users come to our platform or other platform, but you already build a successful tour to user, that then you can easily to charge each person probably $10 per month, and then you can easily to get rich. So I think now is a new generation to user who think about what is like a builders. You can build lots of different things. It's not a company. It's about tour. This is what we want to share about if you are a builders want to start in RWA. And at the end, I have only one takeaway I want to share is that if today you build anything into crypto, it's no reason you building in any other chain. You only have a few answer can build something in crypto. I don't know. Probably the people don't like this answer, but if you are in Asia, you only can build something cool in BNB Chain, because only BNB Chain have real user. We already proved it, and we strongly recommend it. Any builders, no need to figure out that, oh, we need to build a really successful company from day one. You can just building your first project for 10 user. This is my answer. Thank you.
Wow, interesting. And thanks for your motivation, Selena.
Yes, so I'll add this point to my answers as well. It's like building on BNB Chain, because it has real users. And yeah, so anyways, so I think my first suggestion is to, so in this space, you should pick one asset class and go deep. So don't try to build it on a too superficial level. Like there are many projects trying to build a narrative like, for example, RWA infrastructure for everything. But I think in this space, like stocks, bonds, real estate, or any other sort of things, they have totally different requirements, different users, and different compliance. So yeah, so that's my first point. And then for our own building experience, you can actually build a community before in a very early phase. So like for Fairshus, our community, we started building our community months ago. So users, they came from, for example, narrative, from education, or from showing up consistently. So like I just mentioned, trust is a very important thing for RWA. So if the trust is a product, and if there's nobody trust you, then even the best tech in the world won't help on this. Yeah, and finally, the key point is about compliance. So I think every builder should think about compliance from day one. So even if you cannot, for example, solve it day one, you can design. You should think to build your architecture like assuming the regulation is coming, because it is, and you don't want to rebuild everything when it arrives, right? Yeah. So in general, I think this space is still early enough for builders who show up consistently and think clearly about what they are doing well and will do. Yeah, there's more room than people think.
100%. 100%. I agree. Alex?
Yep. I don't know. It can call mistake or not, but the most Web3 the builders only have a business team Web3 market. So the Web3 market is the changing very fast. The few years ago, the NFT is popular, and then metaverse is coming up, and like Deepin and AI, RWA is changed very fast. So I think it's the point is make sure your business model is also works in Web2 traditional way. So that's our advice there. Thanks.
Awesome. Great, great, great. So, guys, now we are come to the end of this session. And before ending this, I would like to ask our community who listening us their questions. Maybe we can give few seconds to them. If there are any questions, community, you can ask in comment. If not, we can probably end this session. Yeah. So before ending, I would like to request all of our community member who are listening us, try to type your question in the comment. Okay, I think no questions. We have already answered lots of important thing. So that's why we have no questions. But anyway, so yeah, thanks guys for joining and making this session more successful, and for your very informative, insightful information for our builders building RWAs on BNB chain. And let's conclude this session here, and see you soon in upcoming sessions. Thank you so much for joining. Thank you so much. Have a great
Thank
day.
you.
Bye.
Thank you.
Thank you, everyone. Thank you.
Bye, everyone. Bye.
Bye bye.